couple of hours. That's what the SEBI is now thinking of doing, and I'm sure a lot of people in the market are really having, different thoughts on the matter.
See, there's the difference between market and media. In media, 2-hour expansion is practically nothing. In the markets, absolutely. In the markets, it's almost a crisis.
Yeah, true. So it's a good time actually. I mean, not just this, there is of course always something to talk about when it comes to the market. And we've got Mr. Amit Dalal joining in on the show today. He's someone we speak to very regularly for our regular market chats, but today we've decided to sort of nail him down in a more relaxed setting and talk about the bigger picture. Thanks very much, Amit, for joining us on the show.
My pleasure. And a happy hour is something that we all brokers look forward to, and we'll perhaps look forward to a happy hour more so after the expansion of working hours for us.
So let me ask you this. Is it now time for me to take my money out from under the mattress and invest it in the market?
How much do you have there?
Not much, but whatever little was there at some point went under the mattress.
Okay.
I'll answer this in 3 different ways. A, you should not have money below your mattress. Otherwise, you
can't sleep well.
Or you will perhaps call the income tax department. So that's one thing one shouldn't have. Secondly, I don't know the answer to that question because I just don't have enough information. I'll perhaps know 3 to 4 months down the road. I will have an answer to our political backdrop which we have in front of us. What is going to be the government? What type of government will there be? How will they address the fiscal deficit issue? Are they going to be aggressive in increasing the fiscal deficit because of their own reasons? What is going to be the economic scenario worldwide? Is there truly a Geithner plan working for us? Is there a possibility that this banking crisis will have gone behind us? As of today, it seems, yes, we are on a working path from the Western world. But I think I'll know this only perhaps in a couple of months.
Is that another way of saying that the bottom is irrelevant to you?
I would be completely of that view. I think if you are not trading, it doesn't matter whether the bottom is 9,000 or it is 7,600 because you are buying to make a lot more in the future.
Fair enough.
You're buying stocks rather than just buying the momentum. So if you're going to invest for at least 2 to 3 years, and this is the right market to invest for 2 to 3 years.
But Amit, you just made the point about elections and the fact that you'll only have clearer visibility after we know who's coming in power. For the market, you think it will have that bigger focus? Because largely, at least what we've seen in the last 10 years is that irrespective of who's coming into power, more or less the momentum, the growth agenda, the kind of reform process we started in 91, that at least has stayed on track. So is it really that important?
You're absolutely right, Surbhi. I think, take last time. We went with clear expectations of who will get the mandate, and we were disappointed after that. And thereafter, we had the largest growth in the history of India of 5 years.
In hindsight, that was a brilliant buying opportunity.
Absolutely. Whereas this time, we are going with more concerns into the election process, so more likely than not, it will create a better investment opportunity before the elections.
Okay.
Not after.
I love that logic.
And therefore, we do have a case to be made out that yes, let's look at the market on a more positive note once those, you keep reading in the media, this front will take over and that front will take over, and maybe that fear is where you have to capture. So you would perhaps best space out your investment between before and after.
The problem is you always know only in hindsight.
That's true.
At least you and I. Yeah,
I'm sitting here now and saying 2004 is a great time to have bought.
Great time to buy. Who knows? You might just sit and think that 2009, 2008 was a great time to buy. But
which is the point that he's making. Exactly.
Absolutely. But Amit, let's just forget about the immediate future right now, the present right now. Let's just rewind back. I'm very curious to sort of understand how your own journey started in the markets, because we were talking before the show actually sort of got rolling, and he was explaining how he was studying in the US and your father was from a manufacturing background.
Yeah, and we did have a history of being in the stock market in the previous generations, but he was in manufacturing, and I decided I don't want to get into manufacturing. I specialized in finance and MIS, and I wanted to come back to India and be in the capital market. Mainly it was with the understanding after studying that where the capital flows are taking place in a financial system or in an economy, that's where you earn the highest. So if you're a bank, it's the best place to be because you finally manage people's money and that never go away from you. Of course, I couldn't be a bank, so I had to be an intermediary, and therefore I chose to be a stock market intermediary.
But 86, the kind of environment that I am sure a Reliance had already come in, so some kind of a cult was beginning to sort of form. But overall, how did you sort of decide to go about it? In 86, the market would have been very different. than sort of where we are today.
Yeah, also as a career, I mean, it was one thing to be investing in equity, but also to get into it as a career, as an intermediary, wasn't looked upon the way then as it is now.
You mean to say shady operator?
Yes. Well, not entirely. But
no, in 85, 86 it was not a shady operation. All that became a part of people's beliefs in after Harshad Mehta. Till 85, 86 it was a respectable profession, but not a very high earning profession.
Okay. I see.
It was a, like a gold trader would have, a bullion trader in India would be considered to be a more affluent person than an equity trader.
I see.
And you had I think there was again a recession in India in 85, 86, because when I had applied for the stock market, I was advised by each and every person that this is the wrong thing to do. And I procrastinated. I kept my application live for 2 years, and I took the decision in 88 to go ahead with my application. And in that interim, things were so bad that my 7 lakhs membership application was reduced by the government of India intervening with the Bombay Stock Exchange that please offer it at 6 lakhs of rupees. So 1 lakh saving meant so much to everybody around us. Okay. So that was the size of the market. That was the kind of capital people had when you go back 20 years from where we are today.
We'll take a short break on this note. On the other side, when we come back, we'd love to hear from Amit on how the nature of this market has changed. A lot of new mechanisms have come in, but still there are issues in this market. People talk of depth, people talk of liquidity, and of course the recent run that certain stocks have been actually seeing. So it leaves a retail investor pretty much baffled still in today's day and age. So we'll talk about that when we return. Stay tuned.
This program is brought to you by Cadbury Bonville Fine Dark Chocolate. You don't buy a Bonville, you earn it.
Chasing dreams, not banking. Choose the way you want to bank. Union Bank of India.
Time of your life.
Let's party.
Have the time of your life. Have the time of your life. Have the time of your life. Xylo.
We don't just help you invest your money. At Nirmal Bank, it's a relationship beyond broking.
I have a secret. मैं तस्वीर के जरिए वहां गया था.
Amit, just tell us this. I mean, surely we've come a very long way from the 80s, but how would you compare this market in terms of depth, in terms of systems, in terms of just transparency and ease from, let's say, some of the developed markets in the world, whether it's Japan, whether it's the US? Are we getting there? Are we still
I think we are absolutely there. We are perhaps ahead of many other global markets. The volume that we record in number of transactions per second is much more than almost all global exchanges that I can think of. We are as much as Hong Kong, I think, or even New York. In terms of settlement volume in per transaction, I think that's also very large. The number of demat accounts we have today is almost higher than, I think, any developed market. So I think we have come a long way in bringing the systems into the market. And we have to really thank the regulator and the NSDL, especially Mr. Bhave, who is now SEBI chairman, and that time he was NSDL's chairman, to have brought this metamorphosis in the 90s. It was unimaginable to achieve this when it took off.